All right. So we are in the world of profits. We're in the world of real life application, which is going to be um, real application, which means it's going to be us making money. All right. So I've so far that I've added 3 different softwares to Tribe Forex. All right. I've added the Tradematic, which was first up, and I've been using the Tradematic for years. Nino knows that we've been using the Tradematic. He was using the Tradematic years ago to trade with me. That's one of the first software packages that we came up with. Then I designed the Auto Rev actually, and the Auto Rev is based off an older software that I've been using for many years now. Redesigned, rebuilt, like just completely overhauled, and really giving us an ability to take advantage of the market as it is, where it is, with precision. And then I designed Auto Bias. I've got one more software package that I am working on right now, and whenever I get that done, that's going to be out there completely free for or not free, but already paid for as part of your package here at Tribe Forex. So whatever it's going to take for you to be successful in our bias assessment, okay, the direction, knowing what the direction of the market is beforehand, that's what I'm going to give you. I'm going to give you whatever it's going to take for you to be successful so that you can get that performance record, that you can begin to make pips for yourself. All right? So since I think that we have that in order and we've got that clear, let's talk about the modifications that I've made. So the only real-time modification that I've made that would affect your trading as far as let's take a look at the auto rev. Okay, I think the auto rev, what we've added to it, which was a request. So if you have a request and you have feedback on the software and it's positive, then I will consider it and I will add it in, because we are a community. We're doing this together. So it's really made to, it's like kind of like a tailor-made software for you. Okay. So I can actually talk about, and this is a great opportunity for me to talk about what the software offers you. So I've kind of added, if you look in this section here on the auto rev, you're going to notice that there should be one more parameter for you, and it's called it's called automatically disengages after a trade. It's not really, that's not the name. It's just a description that we use. So basically, if you hit this is true, it automatically disengages after a trade. Okay, so you take one trade and then it automatically disengages and waits for you to hit it again for the next opportunity. Now you make that false, and it's going to take, let's say that you get into a trade here and that trade doesn't work out, or that trade works out, hits its first take profit, and then comes back, goes to break even, then it's going to wait for another opportunity. Okay? Right? Well, when you engage, automatically disengages after a trade, and it's true, now it's just going to take a trade and it's going to wait. Both buttons are going to go gray, and now it's just going to wait. It's a precautionary measure for people who just want to take one trade. They're lining up for a trade, just kind of the way that I just took this trade. All right. So I actually took this trade during the Asian session. Right. This was our area of support and resistance. When I was making this call, when I was sending you guys the videos and sending the calls, this particular pattern came up, and it came up at my area of support and resistance. I'm expecting price to get back there. Now, what did that give me? It gave me a really quick opportunity to make some quick profit here, and I thought it was going to go down to our first take profit, and then the market was going to retest this area and come back up. Okay? That's what I was waiting for, because of the area that we've designated here is actually a key area. Okay, so I was expecting for price to come down, play with it, come back up by the beginning of this London session, It didn't quite happen. So we're going to wait for it to do so in our New York session, okay? So I'm going to go through all the parameters really quickly on the auto rev and what makes the auto rev so special, because I know that people have questions. Hey, Frankie, how are you? Okay. Yeah, absolutely. I can look into that for you. I'm sorry if that's the issue. I'll have them take a look at it. Of course. All right, so Frankie's supposed to be a full-time member, so we'll get that fixed. Lee, how are you? See you on the forums. Glad to have you as part of Tribe Forex. Really glad to have you guys here. All right, Frankie, I'll make sure that they take care of that. Do me a favor really quick, Frankie, and send a message to info@tribeforex.com, and I'll have them look into that. They'll start looking into it, and I'll follow up with them right now. Okay. All right, so let's talk about all the parameters on the auto rev. I'm going to talk about all the parameters on the auto bias, so you guys can get a real feel for what it looks like to be a trader trading either one of these or both of these. One of the questions that we get a lot is, what's the difference between the auto rev and the auto bias? So we're in the middle of this trade, so you can't really see it operate. But the auto rev, which was my first software that I designed specifically for Tribe Forex, the auto rev is actually extremely precise. Okay, so it's kind of like got laser precision. Right now I'm trading it on the 1 hour, but generally I trade it on the 15-minute. You know, this is a dance that we do. The reason why I traded it on the 1 hour is because I missed the 15-minute signal, if that makes sense for you. So all that was left for me was the 1 hour to take, and so that's why I took the 1 hour on this particular occasion. That's going to happen to you sometimes. You're going to dance with it. That's what this is about. Being a trader is dancing with it. Now, generally, we don't have to do an awful lot of a dance because, you know, we have software that's going to do the dance for us, if you will. So I dance with the software, with the market, essentially. That's what I did in this particular trade. Now, you're going to notice a couple things here. You're going to notice that price moved down in our direction, and you're going to notice that price moved to break even. Okay, so you're going to notice that this red SL line here, okay, that red SL line, that is our area of support and resistance, or that's our stop loss, sorry. Our area of support and resistance is the screen line. So the stop loss has already moved up. So in the beginning, the stop loss, I'm going to be very careful about placing lines on this chart, but it's already in a trade, so it doesn't matter. So our stop loss was up. Let me change the color of this one as well. Okay. So our stop loss was up here at the top of this candle, because when we get a candlestick like this that forms, it literally tells us that the market is placing an anchor at this level. Okay? Now that by itself is not enough to determine whether this is a turning point in the market. Okay? But this combined with a few elements will give us a high probability entry. About 80 to 85% of the time will yield us some form of a result. Not necessarily always a big one. Yeah, I've got allergies out, Frankie, actually. I'm in Madrid, and it's been a while, and I think that my allergies are just kicking up for the first time in a while. So So this is how it works, guys. So basically the auto rev, what it'll do is price will come down, all right? So it'll form this pattern. So we'll put our line on the chart, and we'll go to sleep, go to work, do whatever we're going to do. And the auto rev, as price approaches it, it's not just going to take a trade because, we put a line there. That's not enough. That's not the criteria that we're looking for. It's going to actually look for something that's going to happen that's going to give us a confirmation of where price is really going to go. Okay? So the confirmation we're going to look for is, number one of these reversal candles that we have. We've got two reversal patterns that we use a lot. One of them is this reversal candle. It really does cover a lot of different patterns, because in these patterns we're looking for the communication more than the actual specific pattern. It's what the market is communicating in that pattern that's important. So you'll notice that a reversal pattern may look like a myriad of different things. In this particular occasion, with the bar with the arrow above it, it looks like a hammer, but it's not always going to be a hammer. Okay? So the communication that the market is making is, hey, I'm getting ready to turn around. Okay? And so there are three criteria really that we're looking for. Number one is that something is happening at this price area. So we're in our price area that we're looking for a turnaround. We're at a pod, okay? A point of decision. So if you've done your homework and you've gone over the the course, then you'll know what a point of decision is. Point of decision is a very powerful concept. Okay, it's made my life so much easier, knowing when to get in the market and knowing when to stay out of the market. Okay, I'm not wasting my time in these middle areas trying to take trades, and a lot of people are doing that. I know exactly where the market's going to be. Even if I were manually trading, I wouldn't be wasting my time doing so at all hours of the day or night. I'm going to wait until price action gets near my pods, and then I make a decision from there. So it's looking for us to get near the pods. Two, it's throwing a reversal pattern for us. Okay, and number three, it's looking for some form of a confirmation of price, that price is going to continue to go in that direction, in the direction of our bias. Okay, so you get your bias, you get your level, and then the software will look around there to see if there's anything that is high probability in the direction confirming where we believe price to go. Now that is precise. Now look, when I throw this on a 15-minute time frame and it gives me this signal right where it is right now, then I can have a 20 pip trade. In this particular instance, because I used a higher time frame, okay, I ended up with a 30 pip trade. Okay, but it can be a 10 pip trade, 20 pip trade, and what does that do for us? That gives us a tremendous amount of leverage. Okay, so you imagine you have a 10 pip trade that's at a major area, major turnaround area, and that's what you saw us do time and time again last week. It's at a major turnaround area. Now I've got this beautiful candle that wants to turn around at 10 pips. All right, it's got a 10 pip stop loss, because I know if price passes that area, it's most likely going to continue to go up, right? So if it breaks my anchor, then it's going to go up. So then the where we put it at that pod, having that reversal candle at that pod, we can have greater leverage, have precise entry. And when the market drops for 100 pips, we can make 10 times our money on the second half, okay? And so that's what the auto rev will do. The auto rev is a laser precise piece of software, okay? And that's what it's supposed to do. It's supposed to give you leverage. All right, so we generally trade this on the 15-minute time frame where it has the greatest amount of benefit. Now, don't get me wrong, we can also use it on the daily. We can use it on, some people like to do day trades using it and take a long-term position. That's great. I don't mind taking trades on the 1 hour sometimes with it, and sometimes I'll take, trades on the 15-minute. Okay? Not sometimes. I take them mostly on the 15-minute with the auto rev. Gives me the greatest amount of leverage and the greatest amount of ability. Today, when I took this 1 hour trade, when it lined up right at our pod, okay? I took this trade just because, it was right there waiting for me. We were at an area of support and resistance. It's not so much about the time as it is about where we are in the market. People get caught up on time of day. And don't get me wrong, time of day is very important. I prefer a signal like this to be thrown in the European session or in the New York session. When positions like this are thrown in the, in the Asian session, I don't necessarily like to take them unless they're, of course, on the, on Asian, what I call Asian currency pairs, like the New Zealand dollar, the Aussie dollar, the yen pairs sometimes, right? So something to consider for yourself as far as that's concerned. But the auto rev is a very precise software. It's going to go out there and make us tremendous amounts of pips, and that's what we call capital explosion. Okay, that gives us an opportunity for capital explosion. All right, so I call this a more aggressive software because it gives us greater leverage in the market to make more pips in a shorter period of time. In one session, you can come away with a session with 5%. Now look, I personally like to use the auto bias. I use the auto bias a lot. I'm kind of not in the wild, wild west days of my career, if you will. For me, if I make 2 to 3% per month, I'm going to finish the year with 30%. I'm going to finish the year easily with 30, 50, 100% just off my auto biases, right? And I'm only going to take a couple per day, and I can do that at this stage of my career and be extremely happy, right? I can probably make a couple 100% doing it like that. Very, very simple. All right. Now with the auto rev, the auto rev is something different, and it's going to take. And by the way, it's going to take time when I'm doing that. All right. So it's going to take these incremental trades. The auto bias is different. The auto bias, what it's taking is it's not taking a 10 pip trade or a 15 pip trade. It's taking a trade with a much bigger stop loss. And it's that stop loss is based upon the volatility in the market. Okay? The volatility on the day of the market. That's what it's looking for. So imagine this. Let's say we got into this same trade, which for us now, would have been 10 pips on the 15-minute time frame, or let's take a look and see what it would have been on the 15-minute. All right, great, perfect. 10 pips on the 15-minute time frame. Look at this. This would have been our candle here that we would have jumped in on. I jumped in on the 1 hour because I missed it doing our power hour session. Sorry, there we go. Here it goes, right here, right? So this little bitty candle, imagine that you jump into a candle like this, and this one's still kind of big. It's about 20 pips total risk, and it goes down for about 40 pips, right? 35, 40, almost 40 pips. But that gives us more leverage. So if this thing runs down for 100 pips, now we've got 5-to-1 leverage on that, okay? On the second position, our trend position. And that's kind of what we're going after here. And you get more leverage. But imagine, so you got 20 pips of risk on this trade, but then, if price moves up against us just because the market feels like there's volatility, there's new information in the market, whatever reason, then you're going to get stopped out and you've got to gear up for another trade. And that may happen. You may have one or two that don't make it before you get that big rocketing trade that runs down for 100 pips or runs up for 100 pips. All right? So when you think about that, what the difference is that with the auto bias is it's got a big stop loss. Its stop loss is not going to be 10 or 20 pips. It's going to be, and look, here's what I'm going to do. I'm going to go to the daily so you can see this. If you use, for those of you who want to know, if you use your strong pods indicator, this is my strong pods indicator, you're going to see specifically what the volatility of the market is. So here I've got a value of 101. That means that my stop loss in a 1-to-1 ratio will be 101 pips. Now I like to use mine at 0.5. So I may have a 50%, I may have a 50 pip stop loss on a trade like this. And then it'll be a 50 pips take profit. So 0.5 is 0.5. That'll work for me. And sometimes I'll go 0.5 stop loss and go a 100 pip take profit. Okay. And sometimes during the day on the auto bias, it'll get me into a trade, but by the time I close, it hasn't hit my take profit yet, but I'm in profit. At which point, unless I have a signal in a different direction, I won't get out. I mean, if I have a signal and if I have a signal in the opposite direction, I'll just get out of that trade, take my profit at whatever level it's at, and wait for the next signal. All right, so that's the biggest difference between the two softwares, is that that's not the only difference, but the entry is different as well. So the auto rev is a pinpoint accurate stop loss and take profit, and the auto bias is more of a conservative approach of getting you in a trade and really monitoring that trade. Now, if you hit your take profit, you'll notice that in the auto rev that we're currently in right now, and not that we're in, but that set up for us that I took in the earlier session, just because it was there, right? Or as I set it up, the auto rev was ready for it. That's what happened, really. In this trade, our stop loss was up here where my red line is. When I hit my take profit, price stop loss comes down and stops at just south of break even. You're going to notice that my stop loss, a red line that's actually here now, it's moved to break even, and it's now beyond break even. That's because it's running at a 5-bar trailing stop, as you can see over here on my chart. So it's going to look at the last 5 bars and take the high of those last 5 bars that have closed. So 1, 2, 3, 4, 5. The highest of those bars plus the spread is where my stop loss is currently. Okay? All right, so that's what we have. Now, guys, I'm actually looking, I'm going to probably look for some price action to occur really right here at 1.2700. There's an intersection here between what looks like a nice trend line and obviously a pod 3. Now, guys, listen, just like Nino said, you're not going to want to put your auto rev and your auto rev and your strong pods on the same chart, because the auto rev will read it as an area to begin to look for trades. It's going to look at trend lines, and it's going to look at your pods, your strong pods, or any kind of line that you put on that chart. It's going to look for it. It's going to say, oh, that's a pod. Let me look for an entry. Okay? I happen to have that on here just because I knew that I was going to close. So as soon as I got into this trade, I knew that this was going to be closed out. When these buttons are grayed out, you're not engaging the auto rev. Okay? All right, so the parameters that are important while I'm here, it won't look at moving averages though, Elwood. Good question. Thank you. It won't look at moving averages. It's going to look for lines. It's going to look for it's going to look for trend lines. It's going to look for horizontal support and resistance. So the way that I initially used it is I put my charts, I put my trend lines on the upper time frames, then I come down to the lower time frames to take trades. That's how that looks. Okay, so here's a good question. I'm due for a new computer. Do you have any suggestions for a certain type, brand, or specialty maker? It depends on what you're looking for, Bond. Um, I personally, somehow I feel like this is deja vu. I feel like we've had this question so many times over the years, especially with you, Bond. I think we've had it a couple times. You probably like your toys like I do. Um, so there are two reasons that you get a trading computer. You get a trading computer for two purposes. Number one is to take trades. Very simple, right? That makes sense. And then you also get a trading computer so that you can do analysis on it, right? So if you're just getting a computer so that you can take trades on it, so that you can set up the MetaTrader 4, and so that you can take a trade with it, you really don't need an awful lot to do that. Any computer will do, actually. If you're setting up just one or two platforms, maybe four or five platforms, and you're going to let them run, you don't really need a lot. My office computer is not tremendously powerful. The one that runs a lot of my software on it. Okay, now in the world of or the office computer that I use for this, which is to actually take trades and to follow through. Now in the world of what it looks like on the second side of it is to analyze. Then you got to get into another world, because now if you want multiple screens, you've got to have an upgraded video card, okay? And then you've got to buy a special equipment for that. So you're going to want an NVIDIA or like a high-end Intel video card, so you can project to multiple screens at the same time, 3-4 screens. So if you're the type of guy who actually wants to make this a career with the stuff that I'm doing, and by the way, I don't use multiple screens anymore that much. I mean, I've got them in my office, but I don't really use them, right? Because I've got all these software, I've got all my software set up, I've got all my, I know what to look for beforehand. So those days are gone. I mean, I used to have 5-6 screens open and looking at the market and trying to figure out where it was going to go next and that sort of thing. Well, I still look at where the market's going next, but I don't need to have it on all that. I could have a single laptop and have it running from a laptop if that's what I want to do. Right now I'm using a VPS, using office servers and computers. And they don't do an awful lot of work, all right, because I set up my platforms there, and then I'll decide what my levels are. I'll put those levels on the chart. I'll make sure to turn on auto buy or auto sell, and I'm done. There's nothing else for me to do. Okay, so in that world. Now, if you want multiple monitors, you're going to have an updated video card. And then after you get that updated video card, if you only want 2 or 3 screens, you can probably get a laptop or a computer, a basic desktop that has 2 different ports, and you can project to 2 different ports. If you want more than that, there's actually a video splitter, if you will, provider that's excellent, and I've used them for years. Okay, my computers in Europe are running off of them with the monitors, and in the United States, in Miami as well. And so, if you're looking for that if you're looking for that sort of thing, if you're looking for a to branch out to 3 or 4 different screens, then I've got a solution for you, and that's going to cost you more money. Now, if you don't want to spend a lot of money, you don't have to. So if you're like an Apple user, and I've got a few Apple users here, you've got like an Apple, a MacBook or something like that you're using, and you're wondering if it's worth it for you to get a parallel. You can get a parallel, that's fine, so that you don't have to get a new computer. But if you wanted to get a new computer just to take trades off of, then you could absolutely take trades off of any basic $250 computer. $300 will buy you a computer that software can be run off of. If it's got access to the internet and it's got basic processing power, That's good enough for an MT4 platform, which is why a lot of brokers love to use MetaTrader 4. But if you're looking to do, you're looking to have multiple monitors set up, you need to have a better, much better video card. It's almost good for you to go with one of a gaming type of laptop or a gaming type of desktop, okay, which has a very advanced video card, so it can be split out into 3 or 4 or 5 on different screens. So that's that. And also, if you're looking to do analysis, the kind of analysis that I do using TradeStation, and that sort of thing, then you're going to need processing power. So you're going to need an i7 processor, right? So those of you who are looking to eventually work with me, because I know that some of you have asked for that. I used to have a VIP program. Any of my VIPs in here? So I've had my VIPs from years past, and basically they worked closely with me and I made them work, but they learned an awful lot of stuff. So they basically got to do what Nino got to do. Nino basically is he really worked with me, literally in the offices, just working at it day in, and day out, trading with me. And that's what these guys do. They don't have to be in the office physically, but they were with me. We had sessions. I mean, I really busted their chops and made sure that they would get to the next level as traders. So anyway, in that scenario, you're going to need to learn how to do you're going to be just like me, right? You're going to know everything that I know, basically. You don't need to know how to program, but I'm going to teach you how to use all the software and to be able to create stuff for yourself. And if you tell me you want to learn how to program, then I'll teach you how to do that too. But in that scenario where you need to crunch numbers to figure out what the optimized level is, this is why another reason why our system works so very well is that I've crunched all the numbers. I know what they look like, right? So I've got 50 years of experience as a trader, and I've only been trading for 8 years or 10 years, 8 years full time and 10 years overall, right? It's because I've been able to crunch so many numbers. So if you want to do that, that sort of thing, then you're going to want an i7 processor with a lot of RAM so that you can crunch the numbers that we're going to crunch, so that you can, you can process all the data that we want to process. So that's what's to consider. What's your use? If your use is just basic, MT4 usage just to take a trade, then you don't need an awful lot of processing power for that. Yeah. So just get anything. Really, it just doesn't matter, to be honest with you. You don't need to spend a lot of money on a trading computer unless you intend on going deep, down the rabbit hole with me. Okay. All right. So I'm going to get back to the auto rev really quickly. So I'm going to talk to you about the auto rev. This is a really good time for me to go over its processes. Wish V was in here. V does my manuals actually. So, all right. So you're going to see multiple different things that you can do here with the auto rev. I'm going to use the auto rev here. So you have, first of all, I'm going to start with what we call the GUI. This is the graphic user interface. Okay, this is something new that I started using, I don't know, a few years ago. I'd say about 3 or 4 years ago, putting the actual buttons on the chart, the inputs, all right? So we can get to them easier. It's just easier than going into the back area and putting our inputs in. So let's talk about the graphic user interface. This is this window here. Number one, you can, if it's getting in the way, you can shut it down, okay? Open it, close it, so it can get out of the way. There's an X there. You can do that there. All right, so that's that. Then you've got auto buy and you've got auto sell. That's pretty self-explanatory at this point. You're going to put a line on your chart and you're going to hit auto buy or auto sell. All right, and it's gonna look for trades in that direction of the market where there is a pod that's available. That's it. Really simple, straightforward. All right, so you're gonna see balance. Oh, there's got Rev and TT. So this is a reversal candle, right? With the arrow. That's just like this. It's just a very simple arrow. And I'm looking for a TT. This is actually a TT signal here, actually. And it should be looking for a TT as well. I think because it took a rev is why it's showing on the chart. So let me add a TT for you so that you can know what a TT looks like. That's a triple threat formation. Remember when we first came up with the triple threat formation? So wherever there is one of these patterns, this purple, arrow, but it's a round arrow, okay? That's what we call a triple threat. Now this will also give us a signal, and that's what we have here. Triple threat formation, triple threat formation, triple threat formation. This is a bi triple threat formation that you see here. That would have done really well. So the triple threat formation is actually very, very powerful. You can see almost all the places that I have a triple threat formation, there's actually market movement. If I have a triple threat formation and a break of the high, then that's going to be a high-end trade or a break of the low. Awesome, Bond. See you in a little bit. Thank you. All right, so that's going to be our triple threat formation. And then we have a reversal candle. So we can choose which one we want to use. It's either Rev or TT, and generally they're both depressed. Okay, so you'll see them both depressed on the chart. That means that we're looking for both Revs and TTs. Balance percent. That means that right now we're using 1% of risk at this particular juncture. We're using 1% of our total balance of risk. Okay? So if you have a $50,000 account, you're only risking 1% of that account, which is $500. Okay? On any particular trade. Now, generally, our modus operandi is to use 2 positions. Now, is it going to be 1% per position? No, it's not. It's going to be 1% divided out over the 2 positions. So each position will be 0.5%. You can also switch. So some of you are old school fixed lot users, right? Very simple. You can switch to fixed lots, and every trade will be the exact same lot size that you'd like it to be. So if you like 0.1 or 1 lot, and you just want to take trades at 1 lot each, to keep it simple, it will do that as well. TS bars, we've got it set at 5 right now, and that's what I was showing you as far as our stop loss moving down to break even. TP factor, it means that whatever our normal, okay, so we have SL factor and TP factor. So whatever our normal stop loss would be, we're taking a factor of that. So for this auto rev trade that we just got into, which is a 30 pip trade, our TP would be 30 pips. So it's whatever the stop loss is times it by 1 on the TP factor. Now if we had a TP factor of 2, it would be whatever the stop loss is times it by 2. Very simple. And SL factor is basically taking looking for the stop loss. And same thing, multiplying it by 1 is what we have right now, so it would put it right above here. And if we multiplied it by 2, then it would be twice as big. So that's that. Now we have stealth mode, which means that we don't, if you notice here, we don't have the stop loss, we don't have to take profit. We don't have any pendings, but if you hit close all trades, it's going to close all the trades out. that you currently are running on that particular currency pair and that time frame. Okay, whatever it's managing. Okay, so that's that. Now, if I look in the back area of the auto rev, we've got the reversal pattern close to line pips. So it's looking for a line that's within, at this point in time, 3 pips. Generally, it's 5 pips. So I'm looking for a reversal pattern that's within 5 pips of my pod. Okay? Don't worry about this first one. That's not for you. That's for us, for me. Automatically disengages after a trade. Basically, it's just going to disengage after a trade. Really simple, straightforward. So when we get into a trade, it's going to disengage. It's not going to take another trade. Enter only at high-low breakout. Now, this is another one of those things that I talked to you about. Not only are we looking for this candle, this reversal candle to have formed and for a pod to be present, but we have to have a break of the low in the direction of our bias, in the direction of that sell candle for us to get into that sell or get into that buy. Okay, trade only near support and resistance. It's looking for this line. When that's true, we're looking for the line. If that's false, then it's going to just take random trades anywhere that these reversal candles form. Stop and reverse is a special setting that we have that we're not using currently. And basically what it is if we were to have this trade and it were to go against us and it were to hit our stop loss, we would get back into a buy trade in the complete opposite direction. Our stop loss being where our entry is, our entry being where our stop loss was, and we're going to look for price to go up now. So it's really a dance with the market. We're not currently using it. So reversal pattern we have set at 10. So basically that we're looking for the highest, for this reversal candle to be the highest high of the previous 10 bars. Okay, really simple. Entry candle after pattern. So if we had this entry pattern, this reversal candle, and 3 bars formed after it, and we still didn't have a break of the low that would initiate our trade, we would consider that the market's real intention was not to take a sell, and we would invalidate that reversal candle. It would no longer be valid. So SL factor, TP factor we've talked about. They're both it's in the GUI, in the graphic user interface, and it's here as well. Fixed lots, that would just be pushed to true. We just talked about that as well. You can set the lot size. Now here's an interesting one. This is called max open orders. So if you set automatically disengages after a trade to false, and then you set your max open trades, you can actually take more trades in the market at the same time. In fact, you don't have to even change the automatically disengages. Say that you're in a trade, and we're in this trade right now, and we're expecting that, let's say that it ran down 50 or 100 pips, and we're expecting price to come back up after it's dropped to this area, and we want to get into a second trade. So we're already in our first position. We've made money on it. Our take profit is already hit, and now we're in our second trending down, and we want to stay in that trending trade, right? We could tell the system to take another trade when it comes back up to another area of support and resistance, and it'll get into a second trade so we can compound our profits. Okay? Balance percentage, we've talked about that. Now here's another one. It's minimum stop loss. So if we have a stop loss, we have a trade that only has a very small stop loss of 5 or 10 pips, 5 pips. Well, we don't want trades that are only 5 pips big. Let's say that we have found that 10 pips is the point that we look for. Okay, so optimized level is 10.5 pips. We'll go ahead and put 10.5 in there, and that will be the smallest trade that we'll get into. Now, what does that mean? It means that we'll take the 5 pip candle or the 5 pip signal, but we'll just make our stop loss at least 10.5 pips. Trailing bars I've just talked about. Maximum slippage. So if the market drops down a little bit from where we should have gotten into an entry. We'll still get into the trade within 3 pips of where the optimal entry would be. Stealth, stop loss, and take profit. You can see there that our broker doesn't see our feed, so there's no stop loss and no take profit. Show dashboard. That's where we see all of this, the GUI, the graphic user interface. You can change the colors if you don't like my colors. And ECN broker you leave that as true mostly. Okay, and so that's basically all of the parameters for the auto rev right now. All right, so that's that. The auto bias has very similar functionality. Obviously doesn't have the rev and the TT, but it has the same functionality more or less. All right, so guys, hopefully we'll get another shot at this. And look, here's what's going to drive the market. So, by the way, you know that we're technical traders. Anybody not clear about that? So, what's going to drive the market is actually information. So we're technical traders. We're going to look at what's going on the charts, but are we going to pay attention to what's going on as well in the markets fundamentally? Absolutely we are, because it's going to drive the market. It's going to give it an impetus to move in one direction or the other. So that may be just what we need to get the kind of movement that we need, so we can get another shot at it, get an opportunity for a trade. You know, that's what we're looking for. So when basically the eyes of the market, the traders that are in the market are going to begin to look at the market when we get red news. Okay. So when we get some red news, it's going to give us, you know, the eyes of the market are going to be right there, probably on the pound. You know, we're going to look at the pound dollar, pound yen. If the yen isn't running it, then we're going to look at the pound dollar, certainly, and some pound denominated pairs, okay, or pound numerated trades as well. So when that comes out, that's going to give some form of movement to the market, and that's when we're going to probably start seeing opportunities develop. The next thing that we're going to look at is 5 a.m. 5 a.m. is probably going to be a good time for us to look at a trade. Now look, we always have our trade hours at 1 to 3, and then we also have them again from, you know, about 8 to 10 a.m. generally, and sometimes 8 to 9 because there's nothing going on in the market. Sometimes it's 1 to 2 Eastern time for that purpose and for that reason. So what we're going to look for is information. So guys, honestly, in about an hour and a half is to 2 hours is when the market's really probably going to start making its ascent. It's going to start doing something, and hopefully we'll get an opportunity there. May shoot up, may shoot down, whatever it's going to do. And so we don't always know when the market's going to move. So if you've got your auto rev or you've got your auto bias running, then that's what it's got to do. You've done what you had to do as far as that's concerned. This is more of a Q&A, an opportunity for us to get to know each other better, an opportunity for me to, you know, talk to you about some of the things that we're doing, and for you to see live trades. You got to see the live trades too. Even though we're not taking them, you got to see the live trades so that you can believe in them, know that they work, see how they're executed for your own edification. All right, so we're going to look at 430 CPI on the pound, and we're going to look at the euro as well. Now the pound is strong, the euro is the dollar is strong, the euro is weak, and so we're going to look at and see how the market really does react to these areas, if anything. Now we've got a dollar bias, okay, dollar strength bias for the most part, and we're going to see how the market continually reacts. That's it. All right, so that's that. So I'm going to answer a question now that Chris has. Lee, thank you. What are you going to teach us on how to leverage our Forex business, how to begin our track record? Great. Awesome. Great question. All right, guys. So in my series recently, I've been talking to you guys about what it's going to take for you to be successful and for you to start your full-time business in 60 days. And one of those things is to develop a track record. Okay? So developing a track record really does give you attention. This the reason why you guys are listening to me right now is because I had a track record. I showed it, someone else saw it, that it got their attention, and because of that, I'm here right now, and I've been doing this for years, okay? And I still use track records, and we're going to continue to use track records going forward. Track record is your door. It is the access for you to be able to accelerate your growth as a trader and really be able to make this a lifetime, a full-time skill. Now, the skill you've got to learn is, number one, to make a positive track record. So you got to be a winning trader. We're going to do that right now. That's what we're doing. We're setting you up for that even now as we speak. So as we take trades and those trades win, that is you prepping your own track record, okay? So if we take we're taking trades, you're following all my trades, you're at my trade levels, all right, and we're taking these trades together, then you're going to have very similar results to what I have, right? That's number one. That's step one. You got to get that track record, because it doesn't matter if you tell people how great I am or great, Forex is, or how great you are as a trader. If you don't have a track record, it really just doesn't matter. They have nothing to look at to say, wow, this guy's got something. Then forget about it. You can hang it up. You're dead in the water, right? So we got to get that track record. Then after you get the track record, then it opens doors for you automatically, and I'm going to teach you how to leverage that track record into a career for yourselves even before you have money, believe it or not, because this is a skill set. It's a skill set that only 1 to 2% of the world really has. The level of trading that we are able to operate on is what only 1 to 2% of the world can possibly do. Do you get what I'm saying? Not even 1 to 2% of the world. 1 to 2% of all traders, much smaller group. Okay? So I'm going to teach you how to leverage that skill set and that knowledge. So even if you don't have a tremendous amount of skills, but you're able to have access to the track record, which is by following my trades, okay? Even just having that knowledge gives you and presents you with what you needed, which was a track record to prove that it can be done. Because everyone wants to make money. I don't care who they are. Mother Teresa wanted to make money so that she could have more money, so that she can buy more bread, so that she can give it to more people that needed, food and water and whatever other resources they needed to survive. So everybody wants more money. I don't care who it is. It could be for completely altruistic reasons, or it could be absolutely just because they're greedy, and we lie in between there as well. So it doesn't matter who it is. We understand that that's what's necessary in this world. Now, if you're able to show them a track record where they can take an X amount of dollars and create X amount more, okay, where they can make $1 out of 15 cents, if you will, right? Then you're going to be able to really rocket yourself into a position where you're going to be able to make money off of this. I'm going to show you multiple ways to make money, okay? And we're setting that up right now as we speak. In the next week or two, I'm going to give you another methodology. One of them obviously is to be a money manager. You're going to say, hey, I'm not ready for that. So some of you may be 6 months before you're ready to do that. It's okay. Maybe before, right? For others, it's going to be simply giving people access to what works for you, right? So when we get the trade copier up, there are going to be some people who don't want to trade, but they want to make the money, right? Then you can bring them to our trade copier, and just by bringing them to a trade copier, you will be able to create a residual income for yourself, okay? As they're taking trades, and they'll be thanking you. They'll be naming their children after you, because now they don't have to worry about anything, and they're making incremental gains in their own accounts, while there's something that access to something that most people in the world just don't have. You know, they're stuck doing CDs, you know, doing certificates of deposit, which are giving them 2% per year, if that, or, you know, the normal or whatever that looks like. And with their small accounts, they can't get into real estate, which has good yields, which is about, you know, 6 to 8% per annum, or the stock market, which goes up and comes down, and they have no idea who to go with, and then you got to find a broker, and then you got to trust a broker. Forget all that. They don't have to do that anymore. They don't have to be scared anymore. So, you know, when you open that door for them and give them access to it, even though, you know, all you're showing them is what you've been able to create, then now you can make an income for yourself. And you can actually be a real blessing to somebody else. And that's what I've done for all these years, is to be able to give people access to something they wouldn't have access to otherwise. And that's just, it's a beautiful thing. And then you'll be able to create a residual passive income for yourself as they continue to be with the program, as long as you want that thing to run. That's how it's going to run. So I'll be doing that as well. So there are multiple ways. There are going to be some people who want to be money managers. I'm going to be doing a fast track money management program as well, right? And I've created money managers before. And that's awesome. I love saying that. I love being a part of that. Really recreating myself and slapping them around a little bit, making sure that, you know, they get money management in place and they're not all about the profits as much as they are about right action. Kind of the same thing that we're doing, but kind of in an elevated level and really more, you know, just much more in your face, you know. So, so those are two ways that we're going to be doing it, by leveraging your track record. That's what's going to make the difference, and it's going to be quick. And you can really start doing that soon and really become a Forex entrepreneur the way that I'm a Forex entrepreneur. What's a Forex entrepreneur for me? It's someone who makes money off of the Forex. That's what it is, right? So there are ways that you can make money off the Forex. Some of you are just going to trade your own money. That's great. You're still a Forex entrepreneur because you're taking money and you're making more of it. Some of you are going to make your own money, and then you're going to take it and you're going to leverage it into something else, kind of like what I've done. Okay? And that's what I expect of you. So if you want to accelerate your growth, accelerate your accounts, pad your accounts quickly, or not live off of your accounts but go full time, then I'm going to give you access to that. And that's what this is all about. All right, guys, so we're at 3 o'clock. It's not an awful lot going on in this market right now. We've dropped a bit more. I'm believing that price is going to come back up to our levels, probably around 435. I'm actually glad that it's not up there right now because there's no information in the market. So yeah, Elwood, I figured you'd like that one. Of course, you know, that's what we're here for. We're out of the box thinkers and we make things happen. But guys, so what I'm going to do is we're going to reconvene at 8 a.m. Eastern time, and we'll see exactly where we're at. You know, if we've got opportunities, we'll check out those opportunities. We'll get into those trades. All right, we'll see how the software has gotten us into trades. Anybody else have any other questions before I get off the line with you right now? We'll get back. We'll be back here at 8 a.m. Eastern time. Anyone else? All right, guys, I'll see you at 8 a.m. Eastern time for the New York session, and we'll see exactly where we are. If you're up and around, look at 4:30 to 5 a.m. for there to be some market movement. We may get a push up, or we could get a push down. Hopefully, you know, we'll get that push up that we need so we can get into some trades. You know, all dressed. We don't want to be all dressed up and know where to go. You know, we've got our trades on. You know, the market should come back up there and give us an opportunity. All right, guys. Thanks, Mike. Thank you. Glad that you're here. Talk to you in a little bit. Bye-bye.